Banks and other financial institutions are what make financial market work. Without them, financial markets would not be able to move funds from people who save to people who have productive investment productions or investment opportunities. Hello friends, welcome to my YouTube channel Mustafa's World. Today we will talk about banking and financial institutions. But before this, I will tell you why study banking and financial institution is important. So first we will go on to discuss the structure of the financial system, how financial systems work. The financial system is complex, comprising many different types of private sector financial institutions including banks, insurance companies, mutual funds, financial companies, and investment banks, all of which are highly regulated by the government. If an individual wants to make a loan to IBM or General Motors, for example, he or she would not go directly to the president of the company and offer a loan. Instead, he or she would lead to such companies indirectly through financial intermediates, institutions that borrow funds from people who have saved and in turn make loans to others. So why are the financial intermediates so crucial to well-functioning financial markets? Here is why. Why do they extend credit to one party but not to another? Why do they usually write complicated legal documents when they extended loans? Why are they the most heavily regulated business in the economy? We answer these questions. So please watch the full videos to get the answers and like and subscribe Mustafa's World. Okay, let's talk about banks and other financial institutions. Banks are financial institutions that accept deposit and make loans. Included under the term banks are firms such as commercial banks, savings and loan associations, mutual saving banks, and credit unions. Banks are financial intermediates that the average person interact or with the most frequency. A person who need a loan to buy a house or a car usually obtain it from a local bank. Mostly people keep a large proportions of their financial wealth in the bank in the form of checking accounts, saving accounts, or other type of bank deposits. Because banks are the largest financial intermediates in our economy, they deserve the most careful study. However, banks are not the only important financial institutions. Indeed, in recent years, other financial institutions such as insurance companies, financial companies, pension funds, mutual funds, and investment banks have been growing at the expense of banks, and so we need to study them as well. Before this, we need to understand the financial innovations, which is very important in this current era of 2022 or in 2023 as well. In the good old days when we look cash out of the bank or wanted to check your account balance, you got to say hello to the friendly human teller. Nowadays, you are more likely to interact with an automatic teller machine with withdrawing cash, and you can get your account balance in your hand or from your home computer or in your mobile phone with the help of the application. To see why these options have been developed, why and how financial innovation take place, with particular emphasis on how the dramatic improvements in the information technology have led to a new means of delivering financial services electronically in what was become known as e-finance. We also study financial innovations because it shows us how creative thinking on the part of financial institutions. It can lead to a higher profits. By seeing how and why financial institutions have been creative in the past, we obtain a better grasp of how they may be creative in the future. This knowledge provides us with the useful clues about how the financial systems may change over the time and will help keep our knowledge about banks and other financial institutions from becoming absolute. Thanks for watching Mustafa's World. Keep liking.